Hey y'all, this is Greg the MLO, your favorite mortgage loan originator in the states of Georgia and Florida. I wanted to give you all a special conversation here. This is one of those things that's probably really important right now, especially for first-time home buyers. People who purchase a house before usually kind of have a feel, even if it's been a while, they kind of have a feel of what it takes to get a house. But a lot of times there are a lot of myths when it comes to getting a home. No matter what your age is, you've never purchased a home and you were directly involved in that process, you can be a little bit confused and even deceived. One of those things is down payment assistance, closing costs, what it costs to get a mortgage. Now, sometimes people over exaggerate about how much money they need to bring to the table. Some people feel like they need to bring 20%, 30%. And I would say, hey, if you have it, it definitely helps with your loan, loan to value, your loan amount. But it also can help with things like your MPI and things like that. But realistically, there is no need or necessity for you to have a large down payment, like anything over 10%. It's not a requirement for FHA, and it's not a requirement for a conventional loan, especially for your primary residence. So realistically, we're looking at somewhere between 3% if you're going conventional, 3.5% if you're going with FHA, and it can go as high as 10% if you go below a certain credit radius, like below 580 for FHA. But what I'm saying is we need to do a lot more education, and I'm committed to do more education, because as a mortgage loan originator, you work with a lot of people who have not had the experience of buying a home, and they don't really know the cost. And that's really our area, mortgage loan originator, loan officer. We kind of do the numbers to let you know what you qualify for, but it's also the other side of knowing, okay, it's also including your down payment, whether you're bringing a down payment or whether you're getting a down payment assistance, or whether you are getting seller concession to help with your closing costs, and amongst, different type of credits. So my thing is, you have to really understand that you really can't be a beggar and chooser, for lack of better words. They say beggars can't be choosers, because it's not really a lot. I'm not saying it's impossible, because it's possible in some cases where you're going to have both covered. You don't want to come in with that expectation where you're going to get down payment assistance and your closing costs covered and not bring nothing to the table. A lot of times, even with some down payment assistance programs, depending if you're going with one from a lender or going from a local authority, they're going to require you to bring a certain amount. And typically, at least that's going to be your earnest money. So you always know you're going to spend something, because you're going to spend that $1,000 in earnest money at the very least. At the very least. You don't want to come into a situation trying to buy a home with absolutely nothing. For one, usually with lower scores and you come in with down payment assistance and you come with these different needs, at the very least, you're going to be required to have reserves. You look into certain, situations with FHA, they require you to have 2-3 months or more reserves. I mean, they can require that. And that also requires you to have money. That money is not even counted towards what you bring to closing. That's just, you need to have that set aside to meet the conditions for that approval. So I guess what I'm saying is, you definitely want to talk to a mortgage professional like myself, where you could get a better understanding of what you need before you can assume one way or the other will you qualify for a mortgage. Because a lot of people overestimate. And some people may need a little help, and a little help is possible, and it's very much realistic, more realistic than you need all the help. You don't really want to put yourself in a situation, but I know people have needs, and I know people have desires, and in some cases it can happen. But you want to make sure that you have, I would say, some savings for at least your down payment or your closing costs. If you have both, great. But again, those numbers are going to be based off of your deal, going to be based off the home, the taxes, the insurance, and you just can't predict that right off. So make sure y'all get yourself pre-approved. It doesn't hurt to get a pre-approval to see what we call a pre-qualification, where you will know where you stand, so you can know if it's possible. It's a lot of opportunity out there right now. It's not a lot of inventory, but it's still some opportunities because less people out there in the market trying to buy. Now, I'm gonna give you all a warning. The interest rates are expected to start coming down, and not just coming down once, but probably a few times next year alone. And it's going to trigger a lot of people to hit the market. The problem is they don't necessarily going to create a significant amount of inventory. It will create some inventory because some people will be willing to sell, but a lot of people are just going to be willing to refinance. So go ahead and get yourself ready. Be ready now or be ready for then. Go ahead and get yourself a pre-approval. I'm Greg the MLO. I'm in the states of Georgia and Florida. Y'all make sure y'all reach out to me, gregthemlo.com. And I'll talk to you all soon, y'all.